You are listening to Demystifying Organizations. In partnership with McGraw-Hill Education, I'm your host, Jeff Schatten. My guest today is Stephen P. Williams. He is a writer, journalist, and author with over a dozen published books. His latest book is Blockchain, the Next Everything from Scribner Publishers. And that is what we discuss today. I'd like to welcome to the podcast Stephen P. Williams. Thanks so much for joining me.
Hey, thanks for having me.
So your research and thinking on blockchain is featured in your book. Can you give an overview of what is blockchain?
So blockchain is a way of recording the transfer of value, I would say, the transfer of intellectual property or financial property or various, many other types of property. And it's a way of recording it so that transfer and the new ownership will never be doubted.
And so within that, what is a ledger? So how does a ledger play into that?
So ledgers are integral to our society, and they allow us to have cities, to have governments, to have financial institutions, because they, in fact, I think that it seems like they were really started before the invention of coins or money of any sort. Just a way of people keeping track of what they owned, what they owed people, and what people owed them. And so the blockchain is a digital ledger, and it has some built-in qualities that make it very secure and distributed across all the people who participate in really interesting ways.
Right. So we think of a blockchain as being a distributed ledger where anything that happens on one area of the blockchain, or what we call a node, is then recorded across all the other holders of the blockchain. So for example, the most famous one would be Bitcoin, where if I pay you 0.1 Bitcoins, that's not just recorded between you and me. Let's say in the old ways, we might have a contract, and then I sign the contract that says I've paid you $10. With Bitcoin, it's true that it's recorded between you and me, but it's also recorded on tens of thousands of other computers at the same time. So that's what makes it distributed. Yeah,
it's recorded by all the participants in the chain, all those different nodes. Not every node is if you're participating in a Bitcoin blockchain or any other, you can participate to the extent you wish to. So some nodes have more involvement than other nodes.
But it's for Bitcoin, it is every 10 minutes, it is recording all of the transactions that have ever happened. So if I paid you 0.1 Bitcoin, let's say in 2015, that's then going to be recorded again in 10 minutes and then recorded again in 10 minutes. So it's forever put out there and secure.
Yeah, it's permanent for sure. Yeah. And when you make that transaction, some member of the chain or members compete to verify that coin is actually yours and that they can certify it and put it onto the chain that you're giving it to somebody else.
Right. So just to kind of set the high level theory here is that what blockchain does that's better, that's an advance from previous systems, is that it creates a permanent record that is distributed between many, many, many computers, and that it is unchangeable.
Yeah, that's one of the huge advantages. The other huge advantages is that there is no middle institution that has to certify or verify that transaction. There's no bank or all-knowing person who can say, yes, that happened, because it is registered on all these computers, it's verifiable that way.
Okay. So given that that's what this does, and most people at this point are pretty familiar with Bitcoin at a minimum, where do you see this going? What are the most exciting spaces today that are using blockchain aside from just a Bitcoin? And then where do you see this going in the future?
Well, I think that Bitcoin itself is interesting as a a way of storing value, and also for people who want to speculate and make money. But I think there are all kinds of other applications for blockchain and also the coins. I feel that blockchain was used to make Bitcoin possible back in 2008. It was used as the technology to record all the transactions, but people started using it for many more things. And right now, it's being used to track supply chains. It's being used to distribute money to people who have no access to banking. It's used to record property titles. I mean, there are many, many use cases right now that I think are interesting. And you asked about where I see it going. I see it becoming integral to all parts of our business and social lives in the future, honestly.
All right, let's look at the supply chain issues. So one of the ones that you write about is its use or potentially used for things like diamonds. So a block that people are concerned that diamonds are coming from war zones, so they'd like to buy diamonds that they know have not been a product of war, especially in the African continent. Mm-hmm. And so, how might a blockchain help with that?
Yeah. So to avoid the so-called blood diamonds. A blockchain, well, first of all, I'd like to say that blockchain records information, but it can't verify that the information that you record is true. So if someone on a diamond supply chain, what they have to do is have some sort of certification process before the information about that diamond is entered onto the blockchain, so you can trust it. I just want to get that clear. It's the concept of garbage in, garbage out. Right. So the diamond that is certified non-conflict diamond, the information about that is entered at the very beginning of the supply chain. The miners in Congo or wherever the diamond is coming from. Then each transaction of that diamond, each movement of that diamond from the taking it out of the ground to cleaning it, to processing it, to selling it to someone who sells it to someone else, all of those are entered on publicly onto a supply chain that anyone participating in that supply chain can see. Until finally, when you, the customer, go into Zales or Tiffany's, you would, if you were participating in this process, you could scan a code or look at the tag and figure out how to see the history of that diamond and have some proof that what you're buying is ethical and reasonable according to your standards.
I want to dig down into the garbage in, garbage out problem, because this is enormous, right? So I'm not sure what is the incremental advantage of the blockchain over a current supply chain process for diamonds, when the biggest challenge is not actually that it's on a permanent ledger or not, but that all the information is truthful, because it's very high stakes. You have lots of reasons for people to falsify where that diamond came from. It's very difficult to verify that it actually is coming from a conflict-free zone because they're so small and they're so valuable. Given that, at least to me, 90% of the challenge is actually verifying the information. The challenge of communicating information is not that big, right? So right now we could imagine that they already have sophisticated supply chains. There's already a ton of information that gets passed on about each shipment. Maybe it's not about each diamond, but each cargo shipment and each box is very clearly labeled for most products going around the globe today. So given that the largest issue is about falsifying information and not the communication of the information, what is the real advantage of the blockchain?
Well, I'm not certain that the communication of that information is so great. And the diamonds, they move from person to person. They change ownership probably several times during that supply route. They go through ports of entry. They go through customs. There are all these paperwork to fill out. Different things happen along the supply chain, and each stage is actually almost a separate entity. So that a lot of it is, believe it or not, is still done by paperwork, and it's hard to unify all of that information. It is hard to know that the diamond that was certified at the source is actually the same diamond that you're seeing when it ends up at Tiffany's. So I disagree about that. I think supply chains now are not.
And maybe diamonds is not the best one, but some of these take products being shipped, take iPhones or gasoline, or diamonds might not be the best example. There's a lot of supply chain that's very sophisticated at this point.
Right. Yeah, they are sophisticated, but say in the case of the iPhone, there's really nothing a blockchain can do to ensure the quality of the information that's put onto it.
Right.
I mean, that's just a fact. I would like to be able to say that it did. The one thing a public, visible supply chain can do is the actors who put bad information on a blockchain, that bad information might be exposed down the line or in future years, and that will always be known. It will always be recorded that that company or that person falsified information. And I think that there's a reputational factor built into just the way that blockchain technology is designed that could actually encourage people to have better behavior. But there's no guarantee of that for sure.
Right. So do you see, what do you see popping up that will address the issue of trust? Not trust in the blockchain, that seems to be very well established. Bitcoin has done already a very good job of showcasing that you can have trust within a rather trustless system. But in terms of the garbage in, garbage out process.
Well, let's look at artwork. I think is a really interesting use case for this. So right now, I think one factor is that with artwork now, some estimates are that 50% of artwork sold around the world is forged.
Yeah,
and that's a pretty amazing statistic. So what you'd have to do in those cases is find someone. There has to be a trusted person who can verify whether a painting is what the owner is claiming it is, and that verification is actually very subjective and.
That's a fraud, and that's a fraud process in and of itself.
Yeah, very, very much so. However, if an artist like Jeff Koons, if he makes a new sculpture, his sculptures have sold for upwards of $100 million. If he makes a new sculpture, he can actually enter that artwork onto a blockchain, and it will be permanently registered. There are ways to photograph that artwork that will prove that artwork is what it is. Like if you were to take a copy of that artwork and use the same complex process of verification photography, and you compared the results of photographing those two separate objects, only the Jeff Koons object would prove to be real. There are other techniques. There's something called diamond dust fingerprints, where you can put a mark onto an object that is permanent and verifiable and unchangeable. There are all kinds of people working on efforts.
Wait, and then upload that to the blockchain?
It uploads that information, and then you can, when you want to buy that piece of artwork when it's sold again, you can check that fingerprint and see if it's the original. So with all new work that's created, new intellectual property, anything like that, if you register it immediately on a blockchain, then your provenance is pretty much guaranteed to be accurate. So with older works or with stuff like the diamonds we were talking about that might be coming from an unverified source, then you would have to insist on working with an agency that verified, that you trusted. That verified the source of the whatever goods you're using, be it organic produce or organic cotton or anything.
I want to turn our attention to Bitcoin and to altcoins and some of the changes in currency. So let's start with just this high level question. What's the difference between a Bitcoin and
in my mind, the main difference is just that altcoins were created after Bitcoin. Bitcoin is the king of all the coins, the first really successful digital currency, and all the others followed. There are many different types. There's Ethereum is a very big coin with its own blockchain, the Ethereum blockchain. And then there are, maybe 2,000 other coins or more. I'm not even certain now how many there are that are built on the Ethereum chain, on Bitcoin blockchain, and on other blockchains. And some of them
The way that I think through this is that Bitcoin is effectively a competitor to gold. That Bitcoin, if it succeeds, will displace gold. It will not really be used as a currency so much, but more as a store of value. And the altcoins, some of them try and replace currency, something like Ripple, but the majority of them are what we call decentralized applications, and they can provide two functions at the same time. One is that of a currency, and then the second is some kind of application, like you can think of an app on your phone. In its ideal version, each of these coins does something. For example, you might have a coin that's meant to help do betting online. You might have a coin that does CryptoKitties, that allows for these stupid, really idiotic digital kitties. You could have ones that deal with futures contracts in the stock market. So most of the 2000 altcoins are designed to do something other than just be a currency. Is that fair enough as a description?
Yeah, I mean, that's an interesting perspective. I would say in the case of CryptoKitties that they might be better called tokens that if that's what you're talking about, that represent the property, non-fungible tokens. So that with CryptoKitties, I think you buy them with Ether, which is a coin on the Ethereum blockchain. But then each object of artwork, I mean, you're pretty dismissive of CryptoKitties, but actually they're a revolutionary use of the technology that I think will have reverberating impact that we just can't even imagine quite.
Okay, so why is that? So first of all, CryptoKitties allows you to have a unique digital kitten that has sold. Some of these have sold at $50,000, $100,000 for your own unique digital kitten. What is the case for that?
So the case for them, in my mind, was as kind of an experiment, and they are silly little drawings of cartoon kitties that you can use these tokens and Ether to make them breed with each other and create new kitties, and you can add colors and all kinds of accessories to them. But they exist only digitally. But what makes them valuable, and this is the interesting part of what's called a non-fungible token, is that each object, each kitty and each addition to the kitty is registered as an original work on a blockchain, so that you can take a photograph of one of those kitties, you can do a screen grab or whatever, but you would never be able to prove that it was the original. And it's turning out that this form of art called rare digital art, which also applies to rare sports memorabilia, rare collectibles of all kind, is the first time that we've been able to make digital property unique and rare. And I think that will be transformative.
Right. So I think that's a lot. I think that's a lot of the issues with cryptocurrencies and blockchain, right? And I think this is captured well. The underlying technology for a lot of this is very exciting, and I do think will create change throughout the future generations. But the current asset prices for many of these cryptocurrencies or crypto assets are crazy. And I think CryptoKitties is a great example. There is somebody actually paying $50,000 or $100,000 for this rare digital cat. And that as an investor. What's that?
Why is that crazy?
Because it's effectively a greater fool's theory or just a Ponzi scheme, right? I mean, you just need to find somebody else who will pay more than what you paid for it. But it doesn't produce anything. It doesn't produce cash flows. There's no product. There's no. It's just hoping that there is some greater fool that's going to pay more than you did.
Yeah, I mean that's one way to look at it, but it could also just be a value based on scarcity and desire that creates that market. But I do see your point completely. But there's a limited number of.
So this is the issue. Kind of the fundamental issues that I have with altcoins. Mm-hmm. So everything other than a Bitcoin is that the entire market cap of all cryptocurrencies right now is somewhere around $300 billion. Mm-hmm. Let's say, half or over half of that goes to Bitcoin, right, which means that just to rough numbers, let's say $150 billion of value is sitting in these decentralized applications or altcoins. And the greatest thing that it's actually produced, I think, is is CryptoKitties to date. So you're effectively paying $150 billion if you combine all of them for CryptoKitties is the one thing that's been produced. And I'm concerned from a value perspective that maybe it shouldn't be worth $150 billion, but maybe like 15 million for all these altcoins. And I'd like to get you, please push back on me. But it seems like we should see much more developed. Like there for $150 billion, I should see all of my friends that I know should be using these decentralized applications. Because that's an astonishing amount of money. $150 billion. I mean, that's the value of FedEx, right? And where do I see FedEx? I see it everywhere. Like I see FedEx trucks. I see FedEx packages arriving at people's doorsteps. Everywhere I look, I see FedEx. And you say, oh, what's the value of FedEx? Oh, $100 billion, $200 billion. Okay, that's what $100 billion looks like. What are the value of altcoins? Also in that same range. Where do I see it? Nowhere.
Yeah, that's a good point, and I definitely can see where you're coming from. And I believe that many of the altcoins are worthless and have shown themselves to be worthless, and a lot of it is gambling for sure. But I think the use cases and the possibilities for these altcoins and non-fungible tokens is not yet realized. I really do, and I mean, I'm working on an effort myself, trying to figure out. People are basically trying to create new economic systems with these coins, and so there are a lot of thoughtful people doing that. A lot of people who are more interested in the technology of blockchain or in the business case for what they're doing. But there are also, probably more people who have entered, the cryptocurrency space just to get rich and just to milk people for money, and that. That was proven incredibly in 2016 and 2017 with all of the initial coin offerings that people gambled on, and a lot of people lost a lot of money, and a lot of people set up companies and tried to and raised many millions of dollars and then just walked away. I mean, there were people who did that on purpose. That was their business plan, was to get people money and walk away.
Sure.
But I think that the drop in the value of cryptocurrency, including Bitcoin last year, had a great kind of cleansing effect. It was like a heavy rain going over the crypto space and the blockchain space. And I think it left people who genuinely see economic potential and social good potential in all of these technologies. And that's where I look. I definitely think that you're right about the valuation of all these altcoins. Not all of them. I think that Ether has proven to have quite a bit of value, and others I'm not so sure of. But
all right, so the next part that I'm going to now rip on from these altcoins is that the gains, as I see it, will not go to the altcoins. So so as we discussed before, the underlying technology of blockchain is very powerful. That is not in dispute. But the gains of blockchain, in my mind, are going to go straight to the largest corporations. We already see that, right? We've already seen JP Morgan launch its own version that takes it's not a decentralized cryptocurrency. It's a centralized cryptocurrency run by JP Morgan that will allow for instant transfer of billions of dollars from all of the mega banks around the world. So JP Morgan is saying, look, there's this incredible technology. Do we want to entrust that in Bitcoin, or are we just going to envelop it ourselves into our own system and then take over the world with it? So we're already seeing, and now we're seeing Facebook doing this with Libra. So Facebook is now launching its own version of a quote unquote cryptocurrency. It's they say that at some point it's going to be more decentralized. That remains to be seen. So there's no question that this technology is going to be used, but I see it consolidating power in the hands of the powerful. We'll ultimately, I imagine, see federal banks Federal Reserve banks from governments taking over this space and just launching their own versions that's just usurping the technology from the decentralized space for their own
Well,
ends.
definitely they're doing that. There's no question about it. And when you say gains, you mean financial gains, right? So
Yeah. I mean, they're gonna be much more effective. Banks are gonna be much more effective when they're using blockchain.
So they will definitely profit from it. They've seen the writing on the wall, and they all dove in. But the problem I see with that theory that only they will get the gains is that you just stated that they're moving away from a decentralized system to a more centralized system, right? So they aren't going to see the benefits, which I believe will accrue in the coming years to working in decentralized systems. And by that,
what are the benefits of a decentralized system? And let's just lay out what that is. So first, what's the difference between a centralized and a decentralized system? And then what do you see as the benefits of a decentralized?
So the decentralized system, a centralized system would be what we're used to now. It's your father in the family, the Pope, the President of the United States, the CEO of a corporation, with all access to power flowing from the top down, basically. You have to be invited into this system. The people who are at the center of the system, decide what is real and what is not real. Basically, that's how we live, and we're totally comfortable with it. I mean, I can't say that it there are different harms, but basically our society works, as well as it ever has. Now,
okay, so what would be the centralized system within payments?
Oh, banks. And the way that when I want to send money to you, it has to go through Chase Bank in order to be verified.
Okay, and what would be the decentralized aspect?
So in the Bitcoin system, I send money to your address, and it arrives at your address. Nobody else even needs to participate in that system.
And what problem is that solving?
Well, it's solving a number of problems. One is a time lag for transferring money. Sometimes banks just hang on to your money and earn money off of that for a couple of days before passing it along to whoever you send it to. Another thing, international transfers can take quite a long time and go through 3 or 4 different institutions, and each one of those people is taking money. So there's the cost factor. When I send, my daughter was living in Shanghai, and when I sent her money via Western Union, it would cost me $30 or $40 each time, which is, absorbable, but it's not necessary. And if you're a poor Chinese immigrant sending money to your family, it's actually quite a burden. So Bitcoin solves that problem, and other coins too.
What you've described thus far is mostly about time and cost, and centralized systems will take care of that over time. Big banks will take care of that over time.
What's their motivation to take care of that?
Competition. We're already. I imagine with things like Libra, there'll be enough competition that that'll work its way through. And we already have private examples that work through this. Things like Venmo and PayPal already make it where it's relatively instant for payments. I'm going to I now want to turn my attention to lay out what I see as another problem of cryptos that in the payment space of problems that they're trying to solve that I'm not sure really exist. So let's just walk through for the average person, right? This is for me, right? I have very few problems with Bank of America. My money never disappears. I had fraud on my checking account, and the funds were given back. I've had numerous times where there fraud on credit cards. The charges were reversed. If Bank of America goes under, my account is backed by the federal government. I've never had to walk in. I never have to walk into a branch, almost never. In 20 years of banking, I have never had a mistake. I've never met anyone who said there was a mistake by their major bank in the United States. With Bitcoin, you have these major risks like Mt. Gox. So Mt. Gox, the entire Bitcoin exchange was hacked. Or you could say, well, maybe you should just keep your private password for your cryptocurrency on paper. You have the risk of dying. You have the risk of, and no one knows where it is. You have the risk of fire. You have the risk of forgetting where the password was. There are these major, major risks to solve a problem that I'm just not convinced exists. It's like it's a solution looking for a problem to fix. Of course, this is not necessarily the case in developing markets. I think if you are in if you're in Iran right now, or if you're in Venezuela, there are some compelling reasons to use cryptocurrencies, to use Bitcoin. In the United States, I cannot even think of a problem I have with my major bank.
That's an interesting point, and it feels definitely right. I can't point to any big problems I've had with my bank. What I can say is that bank is able to. So you might be a type of person who doesn't encounter any kinds of difficulties with banking because maybe you behave the way the bank wants you to. But I think that some people desire more independence and more freedom from having their financial transactions examined, having things approved. There are a lot of people who want to escape from that. I don't know that I see it as a giant problem, but we both might be speaking from positions of ease and privilege with that. I think that you point to the example of Venezuela. Cryptocurrency has proved to be very valuable for certain people there. But the big problem with that, as with cryptocurrency in the United States and anything to do with blockchain, is the user interface. The user experience, as you described, is very difficult. So I bought some artwork on through a website the other day, using Ether, and it's digital artwork. It's registered on a blockchain, and I went back to look at it. And my non-fungible tokens seem to have disappeared from my computer. And it took me 3 hours to resolve the problem. And it turns out it was a mistake I was making. But that just showed me how impractical and unhelpful the user interface is for blockchain and cryptocurrency at the moment. But I think in this discussion, we're expecting. I look at the potential for these technologies, especially the decentralized potential, and I think it's pretty magnificent. But right now, we're at the very beginning. We're asking a lot. We're asking a lot of this technology. We want it to prove itself very quickly. We want it to be working right now on scale. Doing great things. But I think we have to be patient. I would compared to being in like 1993, 1994, looking at my first URL pass by me on a bus in Manhattan on some kind of advertisement for an internet service. And I was proficient with computers at the time, but I had no idea what that was. No idea. And it was very exciting to me to see it. And if you look at what happened between 1993 and where we're at right now, it's miraculous, really, to think of what we can do with our computers. And I believe that blockchain technology will have the same kind of progress, unless it's usurped by a new technology that comes along.
I think we have a fundamental area of agreement, which is about how the blockchain will fundamentally change the world. It is a very rich technology that I agree is in early innings, and it's very difficult to predict how that will play out. Just like in 1994, you could be sitting there at a bus and figuring out about the early internet and say, this is really going to change the world. And I cannot begin to say how. I do fundamentally agree that is the capacity for blockchain. Where I am incredibly skeptical is of these decentralized systems as being the ones that are going to capture those gains. And I'm very skeptical of the risks of, especially in the currency world, of Bitcoin and the altcoins, in terms of being spaces that are anything other than that for criminals and for tax cheats. So you mentioned, right, that there are people that don't want their information available. They tend to be doing things that are illegal, and it's also right that if you want to hire a hitman or if you want to buy heroin, a checking account a personal check is probably not the way that you're going to go about doing that. And something like Zcash, which is the most anonymous cryptocurrency that's out there, where there's not even a record, it is completely anonymized, would be how people are going to use that. I'm concerned as a citizen of a above board citizen that is where the space will mature the most, and that for those that are above board and pay their taxes and are not engaging in illegal activity, I don't see the gains or the reason why you would go off these centralized systems. That's in the United States, but look, we could imagine, if in authoritarian regimes, there would be good reason, perhaps in China, for people who might be worried about the state. There are places where I could see wanting more of anonymous currency transactions. In the United States, I don't see the thesis.
Well, I think it's also. I have a few thoughts about what you just said. One is that it's more than just anonymous transactions, and honestly, most Bitcoin transactions, if you can hire someone who is a Bitcoin detective who can figure out who spent what. So it's not really totally anonymous, based on patterns and usage and whatever. But the other thing is, I think we're looking at one problem I have with much cryptocurrency talk and blockchain talk, and this would apply to JP Morgan and Facebook and other companies using it, is that we're often trying to fit the new distributed systems into our old paradigms, right? And I know this sounds kind of like pie in the sky talking, but I think that we have to look at these technologies as opening up a new way of thinking. And it's going to take some very creative people to figure out where to take this. Like, one area that I see where cryptocurrency can be very valuable is that cryptocurrency and these non-fungible tokens is that you can have a piece of property and you can divide it into a million different units. Like, someone approached me recently to tokenize a piece of property I own in Manhattan, to make it available for investors for as little as like $1,000 each. So to me, it wasn't feasible because I thought it fell outside of the law in terms of real estate law and whatever. But maybe in the future it'll work out. And if you join a REIT or a real estate investment fund now, you have to be a certified investor with a certain amount of money at your disposal. You have to do all these qualifications. I think that cryptocurrency and blockchain allow for more regular people to get involved in the financial system, and certainly for people in sub-Saharan Africa and India and other places where they can't. So that's one point.
So in the United States, we already have fractionalized real estate investment vehicles for regular people. I'm drawing a blank on the name. There's a couple different like lending club type platforms where you can invest in with as little as a few $1,000s in various commercial real estate properties, and you just own a portion of it. Likewise, we with things like Betterment, M1 Finance, and now even announced just today, JP Morgan Chase is offering this, where you can start having fractionalized shares of companies at very, very low cost. It's something like M1 Finance. You can invest $5 in the stock market, and there's no fees. And you can own.
There's no fee? I wasn't aware of that.
Yeah, and you can own like a very, very small fraction of whatever stock that you want. So again, this is why I see so often that these blockchain initiatives are trying to solve problems that are often already available with traditional companies. And I see that these traditional companies that we're very used to, they're going to take the blockchain technology and just envelop it in their current systems. All right, I want to talk about another issue, which is the environmental problems. So Bitcoin, especially, is notoriously awful for the environment. And this comes from the miners, right? So if you want to mine Bitcoin, it takes super computers that are going to run very hot and drain the electricity grid. I wanted to see what your thoughts are on are there any solutions that are coming out to the electricity issue?
Well, a couple of responses to that. One is I don't own any Bitcoin, and the reason I never bought any Bitcoin was for that reason, that I didn't think it was ethical in terms of environmental damage. But as I've studied it more and more, I've come to question the estimates of power usage for Bitcoin mining around the world. I don't think that we really have very accurate information on that. And I think there's a lot of alarmist information. Someone came up to me after a talk I gave and said that she heard that Bitcoin used as much electricity as the entire rest of the world. And
No, that's not true. That's definitely not true.
Well, yeah, it's not true, but it shows you the level of worry and hype about this.
Yeah.
I can't really say how much it uses. Obviously, it uses a lot.
Yeah, not even close to the rest of the world.
But a lot of the mining is done with renewable resources next to hydropower, and there are different aspects of that. But what I would say is that, and this applies to the criminality of the cryptocurrency, it applies to the electricity usage. Look at the US dollar. How much electricity is used for our banking system? How many ATMs do we have? How many banks do we have? How much money is spent on advertising? Just an endless thing. Okay, if you look at the criminality that you propose that cryptocurrencies attract, look at the U.S. dollar. I mean, we've had successful criminals for hundreds of years with the U.S. dollar all around the world. It's the main form of criminal currency around the world. So I don't really, we forget that, and it's because of the fear of the unknown. And so we have this. People have a real visceral response to cryptocurrency in particular, and also blockchain and AI and other technologies. And so we create this sense that it's another technology. It's something apart from us, something different that we can't control and we don't understand. And so we ascribe a lot of fearful behaviors to it. And I just don't see it that way. Your points about existing systems working well, I think, is a really good one. And I totally agree with a lot of what you're saying. But I don't think that's reason not to explore the potentials of blockchain technology. I really don't.
I pretty much everything you're saying, I agree. I mean, I'm very bullish on blockchain. In fact, I gave a presentation once called "Long Blockchain, Short Bitcoin." Yeah.
Oh yeah, that's interesting. That's how I see it.
Like,
for sure.
I see these decentralized cryptos as being very problematic, as we've discussed. But very bullish on blockchain.
So let me tell you about one interesting use case, which is a company called Dada that was founded by two pretty radical women, and they one from Venezuela and one from Mexico, and they've created a system where artists can create artwork on their website that's registered on blockchain with NFTs, and they can also sell it there, right? And when anyone sells one of these works of art, a portion of the money goes to the company, a portion goes to the artist, and a portion goes into a general fund for all the artists who participate in the blockchain. And the idea with that is that they will be able to give an income to artists around the world, because it's a very international organization, regardless of their talent, based on the amount of work they do, based on the amount of effort and they put into it. And I think that that's an interesting, very alternative economy that they're creating. Who knows?
Thanks for listening to the podcast today.
I believe that
if you have any questions or comments, you can email me at jeffschatten1@gmail.com. You can tweet me at Jeff Schatten. If you like this podcast, press the subscribe button. Make sure to rate it on iTunes so that other people can find it.
Yeah, these are interesting and probably really scary too. But these exist only due to the distributed nature of blockchain and the use of cryptocurrencies. And basically, they're like corporate entities, but they have no centralized authority once they're established. So that every node, every person participating in the company on the blockchain would basically have control over the company. So it's a coordinated effort. I wouldn't call it communal, but everyone can participate in the governance of that organization.
So it's like an organization without any people.
Yeah, without any bosses, without anyone in control, and so it can expand and spread as it will. I have a feeling. I mean, one extreme.
So it's like a mob.
Yeah, if you believe that humans devolve to the mob way of being, automatically, yeah. Except it's interesting, and also it could allow for machines to have their own companies, which I find really interesting. I'm working on a book about AI and robotics right now, and I don't think we're anywhere near this happening, but potentially in the future, machines could earn their own money and do their own banking and participate with other machines in enterprise. Now
Yeah, I think it's a really interesting concept. So the idea would be that, and you need two generations ahead of AI for this to happen. But effectively, you would program in decision making into computers that would then have second and third order decision making processes, so that it's not just like what we have today, where you can do some basic if then things for think of a trading algorithm on the stock market. You can easily say, if the Federal Reserve does this, and if the S&P 500 hits this level, then sell these assets. What this would do is that this would have a second order and third order, where it would also be making decisions layer on top of that. So that,
and this would be, as you said, we're a long way from this.
I think it's really interesting. As a professor of organizational behavior, it would certainly put me out of a job. You would have no need for a management professor at all, or a management podcast. But it's a very interesting idea. I would imagine we are quite some time away from that.
I hope I live to see it, honestly.
Yeah. Well, all right. Well, this has been fascinating. I love talking about this stuff.
It's great talking to you.
Sorry if I usurped too much of the talking on this.
No, not at all. You're very knowledgeable, and it's interesting hearing your perspective.
All right. We will call that a day. Thanks so much.
Sounds great. Thank you very much.
Thanks for listening to the podcast today. If you have any questions or comments, you can email me at jeffschatten1@gmail.com. You can tweet me at Jeff Schatten. If you like this podcast, press the subscribe button and make sure to rate it on iTunes so that other people can find it.